Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to Monday's morning call. I hope you had a great weekend. I'm sure a lot of you have looked in the newspapers and saw that last week was, the biggest down week start to a year in decades. But actually, didn't really make Main Street, or Main Street headlines like on the front cover of the New York Post or this or that, which is the whole contrarian type of feel, but it definitely was felt, and I know a lot of professionals felt it, especially those who are somewhat unprepared. What you're going to see when I go through a lot of these charts is you're going to see, a lot of the faulty technical damage that we had leading into 2016, and even where we are right now. We're in a very broken environment, but we also are in a very, very oversold environment. I know on Friday we had the huge jobs report. Futures were up big, and then within 3 minutes they were they were up half of what they were earlier, and then they just sold into the rally. But that was again from a higher price. So I'm wondering if we could finally get some kind of tradable bounce last night. If you guys were watching the Golden Globes, well, I was watching because I wanted to see if my imaginary friend Sylvester Stallone, Rocky Balboa, won Supporting Actor, which he did. And at that point, the futures are down 15 handles. So I know a lot of people are like, ooh, down 15 handles, we get a great entry perhaps, in the hole for some kind of tradable bounce. And then this morning we wake up and futures are up 6 or 7 handles, and like, what do we do now? Are they going to, just tick us up a little higher and give us a crappy bounce, or are they going to be able to maybe sell the market like they did Friday, trade below Friday's pivot lows, and then maybe, find a calculated spot to reclaim it and then bounce? So, we're going to do a lot of little thinking, or, we're going to try and put some plans together. Overseas in Asia, the Shanghai was down another 5%. So at this point, it feels like we're trying to decouple a little bit. Europe's up about 0.5%, and our futures are up. So not over focusing on what's going on there for the day. You look real quickly here at the FXI, just again to show you what's positive and healthy and what's not. In the first quarter of last year, the FXI was pretty much above all the moving averages. Okay, and that's when you had this major breakout here, all the way to highs. Okay, and then obviously this gap got filled, and it broke the 8 and the 21 day, and it's been below the 200 day since the summer. Okay, so below the 200 day is unhealthy. And then finally, the FXI broke this small ascending channel here, and now is at lows below already 2015 lows, I think. So, for that, it's going to be somewhat of a headwind. So, at this point, Asia equity markets are still, something that you have to watch. In the Shanghai, you're going to have to watch 2800. But for now, this is when this broke. And again, below every moving average tells you we're in a very negative environment. You should not have exposure there, especially as a trader. And that's some clues there. We entered this year with the S&P below most moving averages. And, if you look at how quickly this happened, it obviously happened with the gap and go to start the year, but look where, look where all the moving averages were kind of pinched. The same way here. It was actually even tighter here before the big debacle of the summer. Here, you had a few lower highs, and then this was your close below the 200 day on the last day of 2015. Then we talked about what could happen if the bears want to take control. First thing was a break below this 2020, which it did on the first day of the year. Couldn't reclaim it. Then if you tried bouncing, I actually tried buying on this little day there, small, and got stopped out there, and then I've been pretty tactical since, trying to be long or short. At this point, I am flat coming into today. So what I would like to see is some kind of red dog reversal around this spot. Okay, this spot here is 1918. Write that down. 1918 is Friday's low. This void pretty much just got filled. The question is, even if we bounce, what type of bounce will we have? Because I don't think that this low is going to be the low of 2016. I hate to say. At this point, a fast move here, which could have started if the futures were down 15, would have been a better spot to perhaps look at, this 1870-ish area. But again, they're not giving any easy trades away. The first level that we were looking to see if there could be a bounce was right around here, and that failed. So here's your pivot. Here is the double bottom. Remember this? Oh, these were the olden days. The V that turned into the W that gave you a nice trigger along here, a nice little flag, boom. Okay, that was last year. Now here we are, and this is your next point of reference. But if you look again at a longer term chart, which I've been trying to show here and there, it's really pretty important that this area holds. And it seems as if if we get here quicker, like Monday, Tuesday of this week, maybe we have that for a trade. But then ultimately, it does feel as if for the year, okay, you look where we are in hindsight, and I'm not going to always go over this macro chart because I want to get into tactical stuff. Here was that double top we took out. Remember I talked about that with Kramer, the road to 1700. Well, and then the road to 2000 or 2100. Well, anyway, I kind of think that this area needs to be tested at some point this year. This 1775. Okay, obviously, if this 1775 is going to happen, it's going to have to get through this 1840 to 1870. I'm really not in the camp that we get all the way down to here, but I'm thinking really somewhere, in here, if we get it quickly, we get some kind of bounce, and then, this is an area that we probably see, okay? And I'm not going to get into more macro, for today's morning call, because I want to go over levels. I want to go how we could maybe make money today and what we need to be watching, because again, here we are above, these 2015 lows, and then you look at other things like the Russell. It's already below it. The Russell already, broke the 2015 lows. So it's, one sector that's gone through, boom. Okay, and this is very oversold. It's actually coming right into a pretty big spot. So I think if we try and rally, you actually could finally get a small trade long the Russell just for a bounce. Now people are like, how could you have seen this coming, et cetera, et cetera. Well, look, below every moving average, below the 200-day, this spot broke right here, came down, retested it, and then another bear flag move lower. So I'd write down for the IWM today 103.66. 103.66, big pivot. Maybe we try and break below it, come back above it, you buy a little bit, very stretched. I don't think you see a heck of a lot. If we do bounce, maybe back to here. But again, that's a decent trade if you're actively trading for alpha. A lot of people talk about the IYT, obviously, which led us lower. Below the 200-day for most of the year, already below this too, already below the 2015 low. The 2015 low, where the September low was right here. So this is already below it too. Very stretched to the downside and very broken. Here is a head and shoulders top pattern that a lot of people are talking about. But anyway, this too has been very, very broken. Okay, so I guess see what happens here, how it deals with Friday's low, which is 124.43. 124.43. Every time I go over one of these pivots, write it down, because for today I have a feeling either they're going to try and break them, and if they can't break them, maybe they press some shorts to the upside, or if they do break them, you get a quick move lower of some kind, hopefully maybe even some kind of fearful move. We go into some support, we bounce off that, you buy some, takes back the pivot, you add some, pushes higher, you sell some, and then you hold some and see if it builds. Like 3 times last week, we've seen these small little red dog reversals happen, but none of them built. Maybe they build from a lower area. The better trade has been the H sell setup when they bounce and then they fail, then you get short and then they make new lows, and that's what happened last week. But from some price, it's probably not going to happen the exact way like that. Quickly look at the bios. Bios, also lost momentum. I talked about that ascending channel here, and if it broke, be careful, and that was right here. Look at that. Higher low, higher low, higher low, higher low, higher low. It's like a tongue twister, and then it broke. Okay, now here is your pivot low for the IBB. Your pivot low for the IBB is 301.59. The bios are not below, the 2015 lows yet. So I guess that's somewhat of a source of relative strength. These bios love to do ascending channels, right? The IBB broke it right here. Here was another ascending channel it broke, and then here was another one. So make sure you follow those ascending channels there. And here's that pivot, write that down. If we happen to see some kind of fearful cascade, this is real support going across. So this almost looks kind of more in line with the S&P. The Qs we talked about with technology played downside catch-up, and it did. Okay, and that upper channel, which I think a lot of you are using as stops, got broken to start the year right here. What else happened? It broke the 200-day, and stayed below. You had a gap and go to start the year in technology, giving you a blaring hole for technicians to get out of the way. And this was a spot that we talked about that it could see, and that's where we are. We'll see how it acts today, 103.90, right down 103.90. I'm hoping at least it could push below and maybe come back and give us a small red dog reversal, for some type of counter trend trade. But again, these are tough in a tough environment. This is your next spot, which is 100.48, and then here is the September lows. But as of right now, all we have to go with is potentially this pivot right here, which is 103.90. So in order of kind of strength, the S&P still is well above the 2015 lows. The Q's still above, and the BIO still above. Most other sectors well below. So you would think that at least those sectors have to test it while the other sectors get beat up. All eyes are going to be on oil. Oil market just every time the oil makes a new threshold low, the market gets more volatile and gets downside pressure. So oil is, I think, flattish to down a little. So if oil gets some kind of bounce, that usually helps. That's what all the algos are programmed to. The last time the USO broke a threshold, which it's done many times, okay, oil is giving you many attempted bounce failures. First one into here was when it broke this pennant to the downside. You had your engulfing move here, made another channel, broke to the downside basically here, and then fast forward, this was your last pivot low that it broke. So at this point, again, oil is well below every moving average. It's broken. USO right here is 9.71 is Friday's low. Some guys are looking at the DWTI, which is the crazy reverse ETF, where when oil goes down, this goes up. There's been a few little trades here and there. This is your pivot. If you're looking to day trade this thing, be very careful. 282.76 is the high. At some point when oil does bottom, maybe towards 28, some guys are looking for some kind of short. Last time the oil bounced, this went down, 100 points or so here, less, and now it's, continue to go. Some people compare this to the SKF of way back when, and at this point it looks like it's still breaking out, and I have a feeling we have to hit the 20s in oil before you get something really sustained, except for, again, it's a long year. So that right down that pivot for the reverse in oil. Then you get the high beta. High beta tech, has been a two-way trade, lost momentum in the end of the year. End of the year, I remember a few of us had a cute little two-day trade in like your Amazon and your Google for breakouts, but they failed fast, and when they failed fast, they moved fast to the downside. Amazon, not really much to talk about here as far as obviously it was a great winner for multiple years. Here's your breakout failure, and now here's your pivot low. So we'll see it's up like $4 or $5 with the futures. The best thing that Amazon could probably do for itself is sell down, break this low here, which is 606, and then get into this gap and hold a portion of it. I'm hoping that somewhere around 590, if it happens fast, you could see some kind of tradable bounce. But again, if it gets into this gap, it's kind of a little bit of no man's land. And so I was thinking that this zone would, I drew it bad. Somewhere in here would be a much better bounce type move versus what we've seen. Google's been trying to act a little bit better. Google also, though, very similar. You see how it had a breakout failure. In strong tapes, you don't break out and fail. You don't push above and come back below quick. And now it did close on its lows on Friday. The pivot here is 728, right down 728. 728. And at some point, just like Amazon, you have a gap here from earnings, and then you have the prior high here. So I would think at some point we get a spot in here that's a much more tradable spot. But from here, that's your pivot. We'll see what happens. Netflix gave you that one-day wonder last week. Still, it's still hard to trust anything, and it couldn't do it by itself. You had this potent big day right there, right? And then you actually even had a negative open the day after and a pushed up before failing, and now not much to go on. It's up a little bit today. I guess it's holding better than other things out there. So see if this pivot holds, and then at some point if the market were to get any better, which I don't know if it will, getting above that would be constructive for momentum. But again, it's hard enough to buy something off the lows with a red dog reversal than to add on strength through a momentum level. So here's your pivot for Netflix. That's 111.10. And then there was a lot of trades that just looked good and didn't trigger, and hopefully, you didn't get caught up in them. I know I lost option money in BABA. BABA looked decent and then failed. I guess that was a little bit of a telltale of what's going to happen with the overall market. looked really good right here, and then I think most guys got stopped out, on this day. I just actually had some calls that are worthless, and now, not much to go on here except for, for a trade, which if there is one you're still interested, 70.67 is your pivot here for BABA. 70.67, if it breaks below, comes back above, maybe you get a trade. Downside gap unfilled, downside gap unfilled. That's showing you people are, getting out and no one's thinking it's cheap yet. In mega cap land, Apple's been the weakest one. We talked about it, accelerating to the downside when it broke 115. Some of you guys made some good money short. Some just got out of the way and hasn't really traded since. It tried to be a little bouncy on Friday. What was the level that it broke? Remember this ascending channel here, broke the 200-day. Even Apple, when it gets below the 200-day, you have to sell, unless you've been holding it for a decade and your average cost is 10, but still, why give back money? And now, I guess we'll see how it holds here. This is Friday's low. It's oversold. If they want to rally the market, they probably try and rally Apple a little bit. I've been saying pretty much since here that I think it hits this 92 and it's well on its way. We also talked about a level, this bearish flag here, if it were to break below 105.50, and it did, and now this is your pivot. 96.43. 96.43 is your pivot, and then, if it bounces, it keeps getting contained by this 8-day moving average, and this is all the way up at around 101.70. So, if it gets back above 100, that's the next area of resistance, but we'll see. There'll be a wall of resistance, I'm sure, so watch how that trades. Check out Microsoft. Microsoft, also losing some momentum like everything else. It's at a huge gap area. See if it could try and hold. I'm not sure if it will. If it gets in there, it pretty much, that pivot here is that, this could see, 50 quick. So take some care. This ascending channel pretty much got broken right in here when it lost the 8 and the 21-day moving average, and now it does seem as if it can get into here, but we shall see. Social's not really doing much. Facebook at least gave you a clue on the last day, trading day of the year. This little wedge here, or it's hard to draw from here, but basically, this tight formation gave a little clues that it was going to resolve to the downside. Resistance was holding here at 107.5, and so was every resistance out there, basically. And then this was your day that that Facebook kind of gave you some clues. You got to be a little careful in mostly everything, and that was right here, closed below the moving averages, and then gap down, tried to fill it, didn't fill most of it, and now you have 2 down days. It's up like 30 cents today. So this is your pivot. Pivot here is 97.03. I was hoping again for a gap down to try and buy this thing. I think now at some point, why wouldn't it at least test, maybe somewhere into here, which is above the 200-day. You have another moving average around 95. So somewhere around here, could be a decent spot for some type of bounce. But at this point, this is your pivot, and Facebook's been unbelievable to a lot of people. It's been in a great trend. You could see it. You go here. Let's go to the weekly for a second on Facebook. But you got to be a little careful always when things have had such a big run, because are these small little corrections or is it deeper? And at this point, if you draw your trend line basically from here, okay, this thing could still hit 90 and be okay. If you draw it maybe from, I guess it's already broken. This is like your accelerated trend, and this is your more intermediate to macro trend. So 90-ish will be big. If we see 90, you better believe S&P's, maybe at 1860 or a little bit below it. But this was your first, you look at that weekly break of an upper wedge. It's coming right into here, which is a spot, and then really this is the bigger one down there. So we'll see. Again, on a weekly, monthly basis, this market's come a long way. On a daily basis, we're very oversold. So that's the dynamic and the divergences we're playing with. Did they just take some fluff out last week? Because they needed to get that out of the way, because we're going to see something bigger to the downside this year. Because a potent down day like we saw on Monday gave direction of the week, and now we have a very potent weekly candle that typically gives direction on the month. So you need to know your time frame and how you're going to navigate it. That's why today I'm going to see if they could sell us. I'm going to use that pivot. If they break below the pivot, what I'm going to use probably is the spiders. If you go to the spiders, wow, look here, going across. This really is some real big support, which we're getting close to. At this point, here is Friday's low, and I guess we'll see, what's going on in here. This is this pivot. We're on a bigger time frame. It was 191.58, and then the September low is what is this low here? The September low is 187-ish, and then this is their flash crash low, which was 182.40. So we're getting to a spot where you would think we might be able to try and bounce from. You go back to the daily and see if there's any other points of reference in here. Okay, sorry, this is this is the low. This is 191.58, and then I guess you could say here's a small pivot, which this low here is 189.12, and then this was your 186.93, and here's your gap and go to start the year that got unfilled, showing you bears in control. So to start out 2016, bears have been in control. They've basically really had control in the last quarter of 2015, but they masked it by the S&P only being flat or down 1%, while every other stock was basically at 2015 lows and making new lows and getting annihilated. So, a lot of technicians and a lot of you guys didn't fall for it, but still, this type of action, could nick you here and there and give you some paper cuts here and there, but whatever you do, don't let it turn into a gusher. Don't play a cost average game that could put you out of business if you can't handle it. And at this point, S&P I think was down 6% last week. We're very oversold. We'll watch high beta. We'll see if oil could bounce. We'll use those pivots. A 15 handle down move, overnight last night would have been better. Now with the spiders up 50, 60 cents, we'll see what happens. Do the bulls get real cute where if the sellers come in and push, like they did on Friday, they're going to make a stand and squeeze them because they couldn't do that on Friday? Or do we break those lows, find pivot support, come back above and get some kind of tradable bounce, or just continue to grind down? There's a lot of different ways it's going to, work out today. I'm hoping we get the red dog reversal in a few of these sectors where we can get a viable bounce, work off some of the conditions, and then, you have bank earnings this week. You have Alcoa tonight, so we'll see what's next. And at this point, it's Monday. Hopefully, you had a good weekend. Your head is strong, and put together a few green days. And if you do that, usually they get a little bit bigger. Have a great day trading.